Good morning, MMT. It's 5:46 a.m. Pacific Standard Time. We're going to do a special feature about Priceline.com and how wonderful of a stock that Priceline has been to us on the long side of the market. However, however, it's going to be our due diligence to go to this weekly chart, and I'm going to show you a 755 put, 1070 by 1130. Now this is going to rise in value on the opening bell, and it's 4/9/2012 when it's called pre-market session, and it's 5:47 a.m. pre-market prior to the regular opening bell. And put the alarms rises to. I'm telling you, because you need to put one rises to at least for this group 13 and a half. You're going to get triggered, and you want to know where it starts working itself up above the 1570 handle, and then how they would come back down. But let me show you a 760 put as well, so that you can see where this 760 put is right now. And it was marked down $9, and that's a monthly regular. And I'm going to also let you see what that looks like here. And it's at its all-time lows. And yeah, I can tell you back over here in 2011, they were $323 a contract because they were. And that's how they wrote them short. But now, when I go back over here and I look at $55 that these puts were on 3/29 of 2012, and they're at the all-time lows of 1770 with a close of 1780. They will get marked up in value. That was that 4/5 reading. I'm sorry, but it was. So let's make sure that the weekly and the dailies are going to correspond as to what those patterns were. 2, 3, and 4. You can see the markdown right here of around 54. We come all the way down here, and the last, day there, you can see where the prints were and the volume, MMT. The important thing about this contract, it's going to gap up today, and that's a 760 that we were already buying, so it's going to gap up in price. Now, let's take a look at the monthly 750 put that's down here at our deflated price. And yes, the calls worked so wonderful last week. Oh man, that was wonderful buying the 730 off the bottoms. And the last time we had the big pullback down to around the 708 area and getting in at 710 and going all the way up here. Well, let me tell you, MMT, 1310 was a low on that contract. And just a number of days ago, 1, 2, 3, 4, even 5 days ago, these contracts were trading at $39.50. That puts us at the wholesale bid for overbought stocks, such as what? Priceline. Let's take a look at Priceline. Here, pre-market open gap, 7,600 lousy shares, closed at 756. Now, what's going to happen on the open, because we're gapping down, is that these puts that we're talking about are going to they're going to gap up in value. Okay, because this is going to go down in value. It will hit support and it will come back up. There will be a time to start loading up those put options while they're discounted to the marketplace within the pricing control system that SMF has, and one that you want. So let's get that straight. Now that we've said that, when we go up to the resistance levels that are lower highs, and or there could be a blow off high, it's been known to do that. Right now, with the gap down on it in price from the close, is that those put options that we were buying last week at the calendar Friday of last week, after they made their all-time highs on the calls, we got out and had to buy the puts. That's how we do business. Something else you need to learn how to do. So we're going to be featuring the Priceline trade. We're going to be featuring the fact that discounted rate to the market, to the premium, is where we're at, and we'll be buying these today. We'll add to it and because they have a lot of room to go back up here. And I'm looking at 45.20 that these contracts were on 3/29 of 2012, because that's the truth. Now, there's going to be trading ranges in Priceline, okay? Um, so basically, we have entered an earnings season, and it doesn't report for, a few more weeks. However, that's not the point. The point of it is that the wonderful bull rally has exhausted itself. And once that exhaustion gets back into the name, we look to find out where key support levels are going to be and the reason why. And the 10-day daily moving average is at $730. The 20 days down here. The topping pattern on the daily of the 5-day pattern was that we trailed above that 10-day simple moving average, your standard technical crap that people look at, and bam, that's that 3-day breakout. And we hit to the 3-day where the breakout started. 1, 2, and 3, period. Now, MMT. At least the way to make money is to short either right below the highs and or where the price failure will come in on Priceline. The 760 put is one feature. The 750 put is another feature that was marked down $6.20. And this is all very short term. And guess what? Guess what? There are some other ones right here that can make money too for a short-term trade, and that's a 700 put well below the market. That's $48 below the strike, and it's only a premium trade. So you have to be wholesale, and it's only going to give you so much yield. But if you have 50 contracts and you make $1, that's $5,000. I don't care what anyone says. Now, that's just a premium trade. And here is the 740 put below the market. So nonetheless, that markdown, and we got marked up in the calls, which was wonderful. But now this got marked down and was buying them on Friday. And these are the ranges. Okay. So basically the weekly, which is right here, we're going to watch that 750 weekly right here. That's a weekly, 413, 750 put. Of course, they're going to gap up in value, but then they're going to come back, and we're going to look at where that market is on that intraday level of entry and exit with profits and pre-market. Other things that we're watching is the big gap down on Apple, and that earnings season is here. And earnings season is not going to be like the last quarter, and I'll do a separate video on exactly how it will be before it even starts. The gap down on the Googles, we're still in a bull run, don't get me wrong, but we're starting earnings season. 4/9/2012. Google's on deck this coming Thursday. And like I said, the calls need to come way down for me to get involved. It can outperform why the rest of them are priced to perfection during this new quarterly earnings that we're starting today in calendar 2012 from the original bull run that we've had going into this quarter. And we've had bulls straight up. But now I have forecasted as of the first trading day of April that price volatility increasing on both sides of the market, and that the bull always has to have pullbacks in bull rally structures. And when that pullback does hit certain levels after the earnings are reported and the good quality can be bought and sold. And between now and then, we're starting to kick off right now. Support, resistance, left elbow gap downs will bounce off of lower bull support channels, and they will continue to get marked down throughout the earnings quarterly reporting session on an individual merit, on an individual basis, on everything. So it will become a stock picker's market. And we will, once again, Go back over here to this 413 call that I said that I was going to make a market on over the weekend. Oh, yes, I did, and I didn't stutter either. And I'm going to give bids out on this Royal one right now at 1050. That's the lower market. Set alarms, though, falls below 1660 because that's $5 less than that, but that's when you get down there, 1660 and lower, 1470 and lower. And once we get down to the bottom area, and when we get that price action, because this is tradable up until reporting earnings this Thursday after the close. This one here, Google. And here is that weekly call. We have never had a weekly expiration and Google reporting earnings at the same time. It always reports the second week in the monthly expiration. However, now we have opportunity here. I will show other opportunities that we have because we have many of these opportunities and we have a whole slew of opportunity right now. 413s are loaded. These are the strike prices. Yes, on both sides, calls and puts going straight up to 421. And got even some going out to May. How about that? 750 call. Up and out of the money. I'm going to be a buyer. I'm going to be a buyer. I'm going to be a buyer. Why? Because I got to get that low win of that premium. I'm going to be a buyer. Look at that. 740. When? Who knows? But sometime between now and Thursday, if I can steal the premium on the call, that means that you see how the column is in red. They get marked down to my wholesale entry with my very limited risk, limited capital dollar risk entry. Yeah, I would say so. Trading that monster house on both sides of the market, this Google trade. Yeah, I said calls and puts and calls and what? 635 put. I'm all over it, and so are you. And you know it's going to gap up. You know it was marked down. You know that it's a weekly. It's an earnings season. It's an earnings week for Google. All eyes on Google. All eyes on that 630 call. And just to let me show you that I will steal the 620 weekly that closed at 2690. Yes, we will steal that bid. And it's pre-market. And it's before the fact, not after the fact. It's the truth beforehand. So let's just see how good our truth is. One of the things that I'm going to tell people up front right now, MMT, is that this call, this 750 call right here, it's a May, and it's $1.20. And I'm going to tell you right now, I want to buy it around 25 pennies. I want to steal that bid. I'm taking my risk out because the retail market was at $4, and I will be owning them at a much lower dollar capital risk exposure. Yes, because I had discipline. I had patience. And I was willing to be willing because I know what's going on and I know what inflated, and I will be wanting to be in Google earnings because I like the company, but I don't want to pay. If I'm buying 50 contracts at $4, that's 20 grand. If I'm buying 50 contracts at 50 cents, I only have a $2,500 exposure versus a $20,000 exposure because I know how to get net wholesale. Yeah, to my risk, to my capital risk. Let it be known, MMTs, as the blood is flowing and people are pumping and the earnings season has come upon us, is where do I get my exposure? As always, at that wholesale bid. And I'm giving it right here, right now on that 620. I'm going to want to trade that 620 call. And I'm going to put bids down here at around 1780 where I'd like to get long. but set an alarm at 22.60 and lower. That's $4 lower, 22.60 and lower, then below the $19.70 area, so that you get flagged on the alarm as we move through the journey in the next 28 minutes, that the earnings season opening bell shall start, and that the markets are gapping down, and I'll do a separate report on that. But let it be known about the Apple short and about getting those calls. Here's a 620 call. They're going to take the premium out of it, and we're going to steal that lower market. And I don't think that the earnings can deliver the current overbought cycle when we start the kickoff. And I'll be doing a separate video on it and why.